Welcome to the Lend Academy podcast, episode number 222. This is your host, Peter Renton, founder of Lend Academy and co-founder of the Lend It Fintech Conference. Today's episode is sponsored by Lend It Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th, 2020 at the Javits Center in New York. Lending and banking are converging, and Lend It Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lend It Fintech, lending and banking connected. Go to lendit.com/USA to register. Today on the show, I'm delighted to welcome Jamie Warder. He is the head of digital at KeyBank. Now, KeyBank is a super regional. Most people know about them. They're actually one of the largest super regionals in the country, and they've been making a lot of waves in the fintech space, doing some M&A, and wanted to get Jamie on the show to talk about all this. And we firstly, he gives us some background, obviously, talks about exactly what the head of digital does, what they're responsible for, talk about their approach to M&A. We do a deep dive into two of the M&A deals they've done over the last year or so. We talk a lot about financial wellness and how that's a really big priority for KeyBank. And we talk about speed and user experience and what their approach to really incorporating a lot of the expertise and knowledge that these fintechs have into the bank. It was a fascinating interview. I hope you enjoy the show. Welcome to the podcast, Jamie.
Peter, thanks for having me. I look forward to our discussion today.
Me too. Okay, so let's get started. I like to kick these things off with giving the listeners a little bit of background about yourself. I mean, you've been a banker, it seems, for quite some time, for most of your career, it looks like. Why don't you give us some of the highlights of what you've done to date?
Sure. Well, even before banking, I actually got started as an officer in the United States military. So I spent 5 years as an Army officer. And it's funny how often my Army days end up shaping who I am these days. Mm-hmm. But after a little bit of time in the Army, a little bit of business school, and a little bit of strategic consulting, where I ended up doing a lot of healthcare as opposed to financial services, I did move into banking. I guess it's been about 15 years ago, and have had the opportunity to just serve in a variety of roles and serve a variety of great institutions, National City, PNC, Capital One, USAA, KeyBank, and currently here at KeyBank. My experience has been in most aspects of banking, so general P&L most recently over the last half decade or so, but before that, channel and product roles along the way.
Mm-hmm, mm-hmm. Okay, so then why don't you, I think everyone here will probably have heard of KeyBank, but some may not know a lot about the bank. So why don't you just give us a little bit of just headline background, how old is the bank, where you operate, that sort of thing.
Sure. So Key is about a 150-year-old super regional. Like many super regionals, we've grown up over the years through both organic growth and acquisition. Our footprint is an interesting one. It runs, I like to say, across the north, although it's a little broader than that, but 5 time zones from Alaska all the way to Portland, Maine. I like it because we have some very robust, mature markets like Albany and Buffalo and Pittsburgh and Chicago. We also have some hyper-growth markets like Seattle and Portland and Salt Lake and Denver and Boulder. So it's a really neat mixture of those hyper-growth markets, but also some strong, robust markets. These days, it is about 13th in almost any measure you look at. So whether it's assets or deposits. We serve everything from consumers to small businesses, middle market, up to institutions, large institutions, Fortune 100 institutions. So the full gamut, and we do everything from a payments, lending, deposits, capital markets perspective for those different customer bases, Peter.
Sure. And so then your official title is head of digital at KeyBank. And I believe this is a new position, and you moved into that, I think, from the business banking area. But why don't you tell us a little bit about what you mean when you say head of digital?
Yeah, so you're right, Peter. This is a new role for Key. So the head of digital, as we reorganized recently, 6 or 7 months ago, we thought there was a need to really bring together our digital capabilities from across the enterprise, start to think about those holistically, and again, from an enterprise perspective, everything from servicing through originations, from our consumer clients through our middle market all the way to our institutional clients, but really think of those things holistically. And I like to say there's kind of two spectrums in digital. One spectrum would say, well, digital is any time you're using software or data to enable the business. Mm-hmm. Well, I think that's everything and everywhere.
Exactly.
So that's a super liberal version of what digital is. There's also a very, very narrow definition of what digital is, which says, well, mobile browser, tablet for servicing and originations. And as we thought about this role, we really thought about it somewhere in between. It's almost thinking about where strategically is it most important for us to think about how we bring software and data to enable the business. But there is a heavy emphasis on those areas where our clients or our colleagues who are working with clients are kind of working with digital capabilities. So, I see it as my job and my team's job to really think about, where are the leverage points for digital and how do we influence those important leverage points for Key.
Okay, so that would be. There's still quite a bit in play there. I mean, you came from the business banking side of things. So does this include small business? Does it include consumer? You're talking about the mobile app. Talk about Zelle, those sorts of things. I mean, what does it exclude? I guess it might be more important what it includes.
Yeah, no, it includes all of those things. So we really think about all of our different client types, and Key proudly serves, 3 million consumers, but we proudly also serve 250,000 small and medium businesses and a number of really large institutional. So it includes all of those client types. It includes, when they're servicing their accounts. So if they're logging in and authenticating and they want to do things like check their positions or move money or, take maintenance on their account. It includes things like you said, money movement, so the bill pays and the Zells and all of those things. What it doesn't include, the one thing that we don't include in the organization formally, but I would tell you we have a very, very strong partnership, would be our unauthenticated, so the, key.com and some of our unauthenticated. We just think that there's a better synergy with marketing there. So we work very closely with marketing, but they run those unauthenticated channels. But generally, if you are logging in, and we have a lot of influence because we're sharing the underlying services on those systems that our colleagues use and those colleagues who are direct client facing. So if you think about it, our branch colleagues and the technologies that they use, our relationship managers and business service and sales officers, and the technologies that they use. Right.
Okay. So I want to talk a little bit about how technology has kind of shaped your thinking, because you've been around banking, you said, for almost 15 years. So, and fintech wasn't really a thing 15 years ago. That term didn't exist. It's now used with abandon today and considered a sort of an all-encompassing term for the technology's impact on finance. But I'm curious, sort of, when you look at like the fintech players, which are those players that are sort of natively digital, natively online, how do you kind of feel? How do you sort of think about those players and what's the impact it's had on a bank like KeyBank?
Yeah, no, it's a great and important question. And, I actually think if we go all the way back and probably back before my time in banking, Peter, digital found some of its early roots in banking. I think if you go back to some early use cases, you were probably talking about the travel industry where, people could begin to book, hotels and airfare online. But a very close follower to that was the ability to see your accounts online. Bill pay came along. So I think some of those early use cases of digital, we didn't call it digital back then, but those were early use cases of using the internet for things that people could do every single day. I think, there was probably, and this is my take on the whole thing, there was probably a 15-year lull or so where, those were some of the killer apps, bill pay and online banking. And, at some point, maybe, I don't know what the exact timeline would be, but 5 or 10 years ago, probably starting with PayPal, I think there was this next evolution of fintechs. And I think it became easier to start putting things together. We started to see fintech players really focus on a particular area, be it in payments or deposits or investing or lending. And they did it, I would say, the right way. They thought from customers back. They designed from an experience perspective. They picked, these slivers of capability and did them extremely well. They did them thinking digital first, not necessarily branch or call center first. And as you and I know, in the last decade, we've just seen an enormous number of those really shape and change the industry. So I like to say fintech, although it's new, I think it's actually resurgent. I think it's been around for a long time. I think we can learn a lot from the fintechs. I think they teach us things like build with design in mind. I think they teach us things like work backwards from the experience, make it easy, make it fast, make it transparent. Like all of these things, I think, are in the digital native DNA. And, I think banks are reminding themselves of those things that they probably thought about 20 or 30 or 40 years ago in an analog version in their physical footprints or their contact center footprints. I think our digital fintechs are thinking about those truly in a digital way.
Right. That makes sense. So I want to switch gears a little bit and talk about M&A, and it's you guys have been, I would say, moderately active in that space. There's a couple of acquisitions that I want to sort of dig into here. But before that, do you have like an M&A strategy that the bank kind of adheres to when particularly I'm mainly talking about, obviously fintech M&A. Is there something that you have sort of a real kind of overall strategy? And then we can dig into some of the acquisitions you've actually made.
Sure. So even before M&A, I'd like to talk about 3 areas in fintech broadly. And it's really the way we think about it here, Peter, along this spectrum. And we have good examples of each. So, first and probably the most common is where we just partner with fintechs. So, one is Zelle, and I guess we can call Zelle a fintech at this point, but, we didn't acquire Zelle. We don't have an equity partnership in Zelle, but we partner with them because they have a great capability that gives our customers, something that they want and need. And we partnered with them as a way, to bring fintechs to our customers. So on one end of the spectrum is just good old-fashioned partnership, supplier, vendor relationships. If you move over on the spectrum, and something that we do quite often, as a matter of fact, we have an entire team that's constantly evaluating these and finding the opportunities, but we'll actually invest in fintech. So, they'll continue to be independent, but we'll invest equity in them. We find this to be a great way to help them shape their roadmaps and help, really make sure that there's good synergy. We can usually help them with a client base and distribution, and they can help us by pushing our thinking on, great design and great capabilities. So we've recently, over the last couple of years, we have, a half dozen examples. Snapsheet, who has a great insurance product for some of our insurance clients. Instamed, which helps some of our providers, doctors, dentists, ambulatory clinics with billing. We partnered with those 2 fintechs and invested in them. And then finally, as you mentioned, the M&A, and we certainly have some of those examples. You'll have read about Hello Wallet, Bolster, and most recently Lower Road. But we do that as well, all-out acquisition. So we are constantly searching, and all in the name of bringing our customers the best capabilities and the best products out there. We're searching with who can we partner with, who can we invest in, and in cases, where can we acquire outright.
Right. Okay, so let's dig into that latter one you mentioned there, Laurel Road. I think many listeners will know that name. We had Gary Lieberman on the show a couple of years ago, and he was the founder and the CEO. And I'm
not nearly as articulate or thoughtful as Gary. Let's just put it on the record.
Okay, I don't know about that. Anyway,
Right.
So maybe. First, Laurel Road obviously focused on student loan refinancing. They became one of the major players in the nation in that space. But what was it that attracted you to the company initially?
Yeah, well, you mentioned one, which is Laurel Road, just a terrific company. And as we looked at them, we saw a digital-first company that had created a very nice consumer lending platform. As you mentioned, the third or fourth largest graduate loan refinance program, student lending refinance in general. So we saw it, one, as a source of just high-quality consumer loans done the right way, done with credit in mind, and making sure we're, originating, very credit-worthy customers, an experience, that has Disney-like net promoter score. So just a really terrific experience. So we liked, one, the consumer lending growth. They also have built over the last several years just really good digital capabilities, not just around student loan, but also around mortgage and real estate lending. And we saw that as an opportunity to use some of their technology and design and be able to import that into our large and growing, mortgage and home equity business. So we certainly like the lending, the core business that Laurel Road is bringing along. We like the technology around real estate lending. But third, and we're still figuring out exactly what and how we'll use this going forward. But what Laurel Road really represents is thousands of customers who come and use Laurel Road are very satisfied with the experience. And, are millennials. They are generally on the more affluent side because a good portion of them are graduates and have graduated from graduate programs, rather. So we really like the fact that it's also a source of household growth for Key. And we need to figure out, is there a way for us to really, can those customers do more? Do those customers want to do more with us? So just to summarize, a great lending business, some terrific technology that we think is leverageable, and then finally a set of clients who we're introducing to KeyBank, and we think we can do more with, given some of the services that Key has.
Right. So then I'm curious that, I know it's only been 6 months, I think, since the acquisition closed. So it's not that much time. And you go to laurelroad.com today, and it's the same experience or similar experience to what it was a year ago. So that Key hasn't taken over the brand, and you do make it clear that this is a brand of KeyBank. Is the plan to keep this as a standalone brand, or eventually fold it in and this will be a KeyBank student loan refinance?
Yeah, we really like the brand that Laurel Road has created, and they've created a brand specifically with the healthcare industry through partnerships with some of the largest healthcare associations. Mm-hmm. So we really like the Laurel Road brand, and for that reason, we want to build on that brand. And right now, there are never say never, but right now there are no plans for us to, change the Laurel Road brand. We will leave it as an independent brand. We'll think about how we grow and expand the capabilities of that brand. We're not going to hide, like you said, Peter, that, Laurel Road is a division of KeyBank. It is. And, if you're deep into your statements, you're going to see KeyBank written all over them. But right now, plan is for Laurel Road to continue to be an independent brand.
Okay, interesting. Okay, so let's maybe talk about one more that you've done, and that's Bolster, which is, Bolster may not be quite as well known, but they were a small business lending platform, and I think this was done. It might have been done. I think it was done last year from memory. So
That's right.
tell us a little bit about that acquisition and how. Firstly, what attracted you, and how you're kind of using, that kind of intellectual property and brand that you acquired there.
Yeah, so Bolster had, as you mentioned, some really unique capabilities around small business lending. And, the ability for a small and medium enterprise to go through an application process, know exactly where they are in that application process, be able to submit documents, pull from external data, e-sign, all of those capabilities, fast, easy, again, in true fintech form. We really liked the technology, and it was an area to us that filled the gap, not only for the small business experience, but also some of the underlying services that we think and are leveraging more broadly for other kind of commercial banking applications. So this one was a little more, we didn't keep the Bolster brand in this case. It was a little more of a technology and talent opportunity for us. And we have integrated that in. We have pilots out in market today. So clients are able to do a small business loan at their place of business in 15 or 20 minutes. We're getting approvals done within the day. We're getting funded loans within days. So again, all in the journey to make things faster, easier, and more customer-centric. We saw Bolster as a way to accelerate us on that front in the small business space.
Right. Okay. So you've weaved it in. Is this going with your SBA loans, or is this just sort of more of the other kinds of loans you do?
Conventional. Yep. This is both. So one of the things we really liked about Bolster was the ability for us to customize the flow of the application based on what we were learning about you. So as the borrower is providing more information, we can then customize the flow. And if it makes sense that the customer may want to consider an SBA loan, then we can start to present those options in app. But if they tell us something like, hey, I'm a nonprofit, we know we can't do SBA loans for nonprofit, then we can send them down the conventional path. But building that logic in, building kind of the brain and advice of a relationship manager or a good branch associate into the technology was important to us. So it's not just capturing information, but it's actually providing, advice and insight along the way. And Bolster done a nice job in kind of building that into their product and we're carrying that forward for our customers here at Key.
Right. Okay. So then going forward, I'm curious to get your take on, the super regionals like yourself. Do you think that this is going to be a big driver of M&A in fintech? I know you can't speak for other banks, but I'm just curious about, are we going to see a flurry of activity over the next couple of years? What's your take?
My take is what we've been seeing over the last several years, which is banks partnering. So I think about, Chase, although, and I don't want to talk about other banks, but, Chase they got started in their small business lending through a great partnership with OnDeck.
Yep.
We can look at where there's been acquisitions. We just talked about a couple at Key, but from reading the papers, these are happening literally every day. And I do think that middle category we talked about, which is, equity investments to help drive the roadmap, I don't see that slowing down. As a matter of fact, in a world where our customers are telling us they want to do more with us digitally, matched with a world where fintechs are thinking about how do we do, the things that we do every day better, faster, more digitally. I think those are natural marriages, Peter. So I don't expect it to slow down. If anything, I expect it to speed up.
Yeah, and it's really interesting to me to see too you talk about the equity investments, and when you see these deals, and there's been a lot of deals this year, some large deals, in fact, so often there is a bank that's part. They might not be leading the deal, but they're involved. And it seems to me that banks are becoming really big suppliers of capital for a lot of these fintech firms, which I think is super interesting.
Indeed. I think they see it as a part of how do they evolve, how do they accelerate, how do they quickly get capabilities that would take them a lot longer to build in the house. And I think we're all becoming comfortable with that. I think that the regulators are becoming more comfortable with that and getting experience on how these type of partnerships work.
Sure. And then, so I'm particularly curious about you talked a few times here about the technology, you're like the hiring of the technology expertise. And one of the things that sets these online lenders apart is the speed that they've been able to, the speed of approvals, the speed of the application process itself. And you said you got the small business process down to 15 or 20 minutes, which I think is great. But what I'm really getting at is this sort of the focus on speed really permeating throughout the bank? Because the millennials, they don't want to sit around and wait. They get very very impatient with any sort of slow process. But so maybe you could talk a little bit about the speed aspect.
Yeah, this is just something that I think, again, the fintechs have probably really figured out. And as they're designing experiences and they're talking to customers about the experience that customers are looking for, you're right. Customers, you and I and all of our friends and family, they don't want to spend a lot of time doing this stuff. They want it to be fast. They want it to be easy. More and more, they want it to be done on their phone, and they can decide where they want to do it. So I think, as these fintechs have been designing their solutions and products, they've really been thinking, how do we make it fast, transparent, and easy? And that's just part of the principles and priorities that they put into their design. And, by doing that, I think they're teaching us banks how important it is to do. And you might say, well, gosh, the banks should, do the same thing. In one way, I think the fintechs have an advantage because they're typically picking certain use cases. So they're not trying to solve every use case. They're picking a narrow use case. They're getting very good at that narrow use case and designing it, in a digital first way. So I think it's important. I think they're teaching us that. And I think more and more speed has to be a design principle that we're all thinking about.
Right. Okay. One other thing that we're almost out of time, but a couple of things I want to really get to. I want to talk about financial wellness. You mentioned Hello Wallet before. And it feels, if you guys have an entire financial wellness section of your website. And that's something that I'm personally pretty passionate about, how we need to doing more to help, the masses of the population that are not doing all that well financially. And so maybe you can talk a little bit about the approach, what's sort of driving from the digital perspective, what's driving kind of the financial wellness movement at Key?
Yeah, no, well, important to know financial wellness is at the absolute core of our strategy. And I'm certainly not sharing any secrets. As you said, it's on our website. We talk about it. We're proud to talk about it. And what do we mean by financial wellness? We want to help you understand your current position and how financially well are you. And then we really want to be able to help you become more financially well. And that could be, across the spectrum. So it could be, someone who's struggling. It could be that individual who is saving for their retirement nest egg. It could be the small business who's trying to figure out how to, finance the next piece of equipment. So this concept of we want to help you understand how you're doing, but then also give you hints and advice and feedback on how to become more financially well. And we want to do that across the board. We want to do that if you stop in and have a wellness review with one of our bankers. But we also, if you're not going to do that, if you're going to be at home, we want to be able to do that digitally as well and just leave it up to our customers. So in every touch point, we are looking for ways, Peter, where we can help clients understand their position and help them do better. So Hello Wallet, if you think about what Hello Wallet was doing, it allowed you to aggregate all your accounts, whether they were with Key or not. It provided a financial wellness score, which gave you a good indication of how are you doing versus others like you. It gave hints and tips and nudges around spending and saving and things that we thought could make you more financially well. Those are the things we're integrating into all of our digital capabilities. Those are the things that are integrated into, all of our human touch points. As if you're talking to someone from KeyBank, they're going to be talking to you about your financial wellness. So starts with strategy, translates then to both our digital and non-digital properties, and is all around kind of a higher mission of helping our clients do better financially.
Right. No, I think that's super important because, everyone has a banking, well, not everyone, most people have a banking relationship. And if you're not getting them there, it's just, I feel like that's the touch point that really where they need to be, people need to be able to get the information and the education about how to improve their financial lives. So that's great. But, anyway, last question, just curious about what you're working on now, what's coming down the track. I know you're a public company, you can't tell me any secrets, but what's coming down the track for you guys?
No, this isn't I'm not giving away any secrets. 91% of our interactions with clients are happening digitally these days. We want to make that experience great for them. So just giving our clients the ability to do more on their phone, to do more at their, mobile browser, tablet. We want to make it easy and fast for clients to do more business. If they want to, grow their relationship with Key, we want to make that easy and fast. So we're really thinking about all of our products and originations, again, across consumer, small to medium enterprise in the largest institutions. And then finally, as we talked about, we're really looking for those ways to embed financial wellness through our capabilities and products. If a client doesn't happen to interact with us, in a face-to-face, we want to be able to still provide them financial wellness digitally. So as I think about those different areas, as I think about, a great servicing experience when our clients need to service their existing banking relationship, when I think about the originations experience and them wanting to do more business with us and make it easy for them to do so, and then just embedding financial wellness across the board. I think those are our priorities. You find those in all of our public statements, and it really is what we're spending our time and focus on. Okay,
that sounds great. I really appreciate you coming on the show today, Jamie.
Hey, thank you very much, Peter, and thanks all for listening.
Okay, see ya. I think banks like Key are going to play a bigger and bigger role in the future of fintech. We've already seen them do some pretty significant acquisitions. They're clearly not finished. And obviously there's new fintech companies being started all the time. There's also more that are getting rapid scale. And, I think you're going to see these banks that are going to jump in and being able to bring their resources to bear on taking sort of all the best practices and the positives and the good, all the good that Jamie talked about in the interview, what fintech does that really, really well, and bringing them into the bank and having them become really part of the bank DNA. Because that's really, I think, what we're getting at here is that banks haven't been known for their speed, for their user experience. And I think bankers like Jamie are very, very clear about that and wanting to change that narrative. And I think it's going to be interesting I think we already are seeing it happen. And I think it's only going to become more so where banks are going to behave much more like fintechs going forward. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Lend It Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th, 2020 at the Javits Center in New York. Lending and banking are converging, and Lend It Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lend It Fintech, lending and banking connected. Go to lendit.com/USA to register.